Let's take it over to Joe Tegay of Equity Armor Investments for the Trader Rundown. Joe.
Thank you, Angie. And finally, we're seeing consolidation in the market. For the better part of a month, the S&P 500 has been range-bound between 3,200 and the 50-day moving average on the downside. The 50-day moving average is now rising. That is above 3,000 right now and should be above the 200-day moving average sometime next week. So it's a good sign when that happens. The 50-day moving average above the 200-day moving average. That's what you want to see in a bull market, obviously. These averages rising on top of each other. So we needed some of this consolidation. We needed to see the market catch up to itself. Now that we have, we're going to need to see some economic data get better. So we've been watching that starting to happen. And then we had that little hiccup, and we're concerned about the coronavirus rising in the south. That is one of the reasons why the VIX throughout this consolidation has not come down. The VIX is still at 28, and to give you an idea of how elevated that is, the high of the VIX for all of 2019 was 24.95. So we are still in seriously elevated levels for the VIX, representing a significant potential risk to the downside. All that said, the skew is starting to rise again in the S&P 500 too, so people are paying more attention on the puts compared to the calls. However, maybe it's a different signal. People saying, you know what, I'm comfortable selling the calls now because the upside's been realized, and maybe that's just part of this consolidation the market needs to work itself through. That's anybody's guess. It's really going to start to be keyed in on the fourth quarter as we're going to start to be paying more attention to the economic data. As the economy starts to open, we need to see these companies start to make money again. And really, investors are comfortable giving them a pass because they expect things to be back online fully some point in 2021, and I'm confident that they will be too. It's just a matter of how bad the damage gets the longer it stays out. The other thing the market is telling us, of course, if you look at interest rates and if you look more importantly at gold, is that if the economy stays bad, there will be more stimulus coming in to the market. So that's certainly a sign that either way it's a win-win for the market, and could just be a simple double win. If the economy turns around quickly, the stimulus is already in there, these companies will do fantastic if that were to happen.
Thank you so much, Joe.
Thank you, Angie. Have a good week.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.